With all the news about the tensions between the UK and China heating up, I've been wondering what exactly would happen to investments here in the UK if we was to go to war with China. Now, I'm certainly not saying that this is going to happen. Perhaps I've just been watching way too many of those Binkoff's Battleground videos. I'm just interested to see what would actually happen to my investments. I'm going to cover two main things. Firstly, what would happen to those investments in the UK? And secondly, what would happen to my investments in the Chinese market? I'm looking at Britain and China just because one, I'm British, and two, I picked China just because we keep on getting told in the news about the tensions between the UK and China. But in reality, you can probably substitute either country for a different one. So firstly, the stock market hates uncertainty, and that's mainly just because it's a reflection of individuals and of companies who both hate uncertainty as well. It just means that companies are more skeptical about investing heavily in new staff, new assets, or making any big decision when there's a lot of uncertainty lingering around. And one thing about war is sure, that there's going to be a ton of uncertainty. And that's exactly what was happening back in March with the coronavirus pandemic, where companies were holding back on investments just because they were so worried about what's going to happen. There was so much uncertainty. And that certainly has happened in past wars and conflicts. So during conflicts, what's happened to the UK market, and in particular, what's happened to the FTSE 100 index? I've chosen this index as it best represents the UK market. It's the go-to benchmark. I looked at the one-day change in the index on the date that the major geopolitical event happened. I looked at the change a month later, 6 months later, and finally a year later, to see if the event had any lasting effects on the market. I also calculated the total days it took to recoup the initial one-day drop. The FTSE 100 index was created back in January 1984. And so this rules out looking at events that happened prior to this, such as the Falklands War, which started in April 1982. What I found is that there is generally a short-term dip. We can see from the chart that geopolitical events such as 9/11 had a significant effect on the stock market on the day that it occurred. We can also see, however, that after 1 month, after 6 months, after a year, the geopolitical event actually had very little effect on the stock market. Most of the returns were recovered by then. You can expect that in a month's time, it's generally going to be back in the green, and certainly after 6 months anyway. It's worth mentioning that this doesn't mean that the geopolitical event isn't weighing down the index. It just means that if the investor was to put money into the ETF or into the index just before the geopolitical event, it's generally going to be back in the green after 6 months' time. It's clear from the research that a large-scale geopolitical event, such as a declaration of war, would have a negative effect on the stock market by around -6%. But generally speaking, after 6 months or so, it would be back in positive territory. You can expect similar results in different markets as well. There's some really interesting research on the S&P 500 and how it's affected by geopolitical events as well. Generally speaking, there's a short-term dip followed by a sustained recovery. I'll leave a link in the description below to that research. It's definitely worth a look. But when I was doing this research, one thing kept coming to my mind. So I know that generally speaking, the money that I'm investing into the FTSE 100 is going to be safe. But what happens to those shares I have in Chinese companies? I own the Vanguard Emerging Market ETF, which invests about 8% of my money in Alibaba and 7% in Tencent. Given that Vanguard is American, what would stop China just deciding that I don't own any shares in Chinese companies anymore? Well, the truth is that they could. We all know how tight of a grip the Chinese government has on Chinese corporations, and they certainly wouldn't want Westerners benefiting from dividends or from capital gains in Chinese companies if we was at war. If, however, they were to delete shareholders from the UK, then they would actually come across some really large challenges. Firstly, China would actually have a really hard time figuring out who and where their investors are coming from. The vast majority of us invest in the stock market through a broker. This means that the actual companies have no idea who the shareholders actually are. And this gets even more complicated when you're investing through an ETF. They could just cut all ties with brokers from the West. But this is really dangerous as it's not just affecting shareholders from the UK. It'd be affecting shareholders from across the globe, anyone that's using that broker. And some of which would be the UK, but the vast majority probably wouldn't be. And this brings us on to the second hurdle. They could just block any UK-specific brokers, such as AJ Bell, for example. But this would actually cause a huge loss of confidence in the market for anyone that's invested in Chinese shares. People from around the world would be selling shares, fearing the same sort of outcome. This had caused the Chinese stock market to tumble, which is absolutely not what the Chinese government would want in a wartime economy. And finally, the implications of such a move would have long-term significant effects on China. It'd undermine confidence well after the war, and you'd likely see a shift away from globalized investment strategies to more domestic ones. So if tensions continued to rise and the worst did happen, we went to war with China, then generally speaking, your investments would be safe. It would, however, give a negative effect in the short term on both the UK market and probably the same in China as well, where you're going to see something like a 6 to 10% drop on the day that the war is announced. This, however, would likely be recovered within 6 months' time. Although naturally, there are some holes in this research. Firstly, it really depends on the size of the war. If it escalated and turned into something more akin to a world war, then the effects would be much more severe. At this point, foreign investment would likely be redirected back to domestic markets, and so investors would be looking to pull out anyway. Chinese companies wouldn't have to remove UK investors or UK brokers, as it would be in the interest of the investors to withdraw anyway. It's also worth noting that there just seems to be so little research on this. And that's actually why I decided to take it upon myself to research, but I really struggled to find really good data which showed the long-term effects of war on the UK economy specifically. I did find some research on the S&P 500, which is what I was talking about before, but I think generally speaking it's really light on the ground, and this is probably because in the past there was so little investment in other countries that this research just wasn't needed so much. Nowadays, with the rise of globalization and the digital age, it's just so easy to gain exposure to foreign markets. It never happened in the past, it never existed, and this means that we're in unprecedented times. I hope you liked the video. I'm actually going to be doing more of these type of videos because I find them really interesting. I really like researching it. So if you have any questions that you think are interesting, leave a comment below and I'll dig out some research and try to answer it. Also, if you've been following the channel for a while, you'll notice a completely different setting here. It's actually just because I've moved flats in London, and so that's also the reason why I haven't been able to upload as frequently. So hopefully I'm going to be back in a routine shortly and you're going to be seeing a lot more videos from me.